Hello, everyone. I'm Dr. John Vauban, PhD in Mechanical Engineering. Today, we want to study two methods for predicting the gold price in the future. I hope you like this video. Thanks. Okay, let's start with the method one. Okay. Today, we're going to discuss the calculation and forecasting of global gold prices. Regardless of your level of knowledge, the concepts will be explained in a clear and understandable way. It is important to note that some approaches used in the market may lack academic validity, but my focus will be on methodologies that are recognized by leading academic institutions such as University of Oxford, University of Cambridge, or MIT. Okay, let's start and study first method. The first scientific method I want to review in today's video is based on research conducted by the University of Queensland and Curtin University in Australia. The method they have proposed is based on the prediction of the gold price using the oil price. To demonstrate the correctness of their proposed method, they have cited the figure you see. Okay, please pay attention carefully. In this figure, two graphs are drawn. The black one showing the world gold price and the green one showing the oil price. The left vertical axis shows the global gold price for the black graph, and the right vertical axis shows the oil price for the gray graph. The horizontal axis also shows different years from 1968 to 2010. It means that over the 4 years, we can compare the behaviors of gold and oil prices. Of course, it is clear that this comparison is independent of the value of the US currency. Okay, looking at this figure, we realize that yes, there has really been a relative association between the price of the gold and the price of the oil in these 4 years. And in many ups and downs, both graphs have behaved like each other. The researchers of the University of Queensland and Curtin University claim that this figure confirms the strong relationship between the oil and gold prices over the long term. But there is an important problem. I have shown the chart of gold and oil prices for you from 2016 to 2026. The gold chart is shown in blue, and the oil price chart is shown in orange. It is clearly seen that the behavior of gold is not consistent with oil, because oil has been fluctuating around specific prices during this period, but gold has more than tripled, as you can see easily. So, maybe between 1968 to 2010, 2015, the price of oil and gold had a significant relationship with each other, but in the following years, this relationship will be separated. But why? There may be reasons for this. One of these reasons is the weakening of the position of oil in the industry compared to the past. Finally, in recent years, a lot of efforts have been made to replace clean energy, which can be one of the most important reasons for weakening the position of oil. And oil no longer acts as the most important player. Another reason is the very high demand for gold in these years. The statistics clearly show that the world's central banks and investors are strongly looking to buy gold, which has had significant effects on the price of gold. There are other reasons that I will not go into it right now. Okay, now let's make a conclusion together. The method presented by the researchers of the Queensland and Curtin University has worked in the past, but now it lacks scientific validity and we cannot use it now. So the first method is not applicable for us now, but I would like to introduce another method, the second method, to you now, which is one of the best methods for predicting the gold price. I hope you enjoy knowing this method, and I hope it can be used to earn money for you. Okay, let's get started. The second method, the relation between gold price and global government interest expenses. Please pay attention carefully. In the figure you can see, it shows the changes in the price of gold from 2007 to 2025, along with the changes in the global government interest expenses. The horizontal axis shows the years, the left-hand vertical axis indicates the gold price, and the right-hand vertical axis shows the global government interest expenses. As can be seen, these two graphs have agreed with each other in the last 20 years, and this issue attracts our positive opinion in this way. So this method teaches us that if we can predict global government interest expenses, we will succeed in predicting the gold price. But what is the global government interest expenses? Please pay attention. Global government interest expenses refer to the total amount of money governments around the world pay each year to service their public debt, especially the interest on money they have borrowed. When government spend more money than they collect in taxes, for example, they borrow to cover the differences. They must borrow. This borrowing creates public debt. However, debt is not free, as you know. Governments must pay interest to the lenders, such as investors, banks, other countries. Global government interest expenses represent the combined annual interest payments made by all national governments around the world. Okay, now let's make a conclusion together. To put it simply, by estimating the amount of the global government interest expenses in the future, the world price of the gold price in the future will probably be in your hands. But the $1,000,000 question: what is the amount of the global government interest expenses in the future, so we can predict the gold price in the future? Okay, so first I have to find the global government interest expenses in the future to find the gold price in the future. Okay. Please pay attention to this figure. Regarding the amount of the global government interest expenses, I have prepared data for you that I hope you like these data. In this figure, which is for the United States, I have provided a prediction of the future of America. Because it is a specialized discussion, as you may know, you don't need to go into the details of this figure. Just be aware that interest cost means the global government interest expenses. Both are the same. The interest costs were projected to approach $1 trillion in 2025, nearly triple 2020 levels. In light of current interest rates, they are likely to more than double by the end of the decade, 2030, I mean. Now, it is for United States. Now, if we assume that the global average will not grow at the same rate of United States, we consider lower rates. Then, by the end of 2030, we can expect the global interest cost, in other words, the global government interest expenses, as I mentioned above, to increase by about 40% to 50%. So, according to this fact, and by maintaining the existing conditions, it is possible that the gold price in 2030 reaches $10,000 or more. Okay, I hope you like this video. In future videos, we'll investigate, as I mentioned, scientifically about gold price, silver price, Bitcoin price, and other cryptocurrencies.